Okay, so welcome back to another video. In today's video, I'm going to be breaking down today's trade that I kind of missed out, but it is what it is. So basically, if we check on the NASDAQ, what do we see here? So you can see the NASDAQ and the S&P 500 both took out Asian highs, right? And then just before market opened, what the price do? If we look closely here, as you can see on the NASDAQ, we didn't come all the way to this high levels to take out this high and this highs. But if we look at the S&P 500, we ended up taking out all these highs right there. So what's that leaving us with? That's leaving us with a bearish SMT. So the issue with this is I ended up missing this trade because I came seconds late into into the market today. So when I came in, I already saw market dropping, and this would have really been a good trade for me. But I wasn't trying to chase the move or anything. If I had already missed the setup, I would just wait for another setup to form. So as you can see here, we ended up making that SMT, which we've already seen. We ended up making the SMT, and if we go to the 3 minute time frame on the NASDAQ, what do we see here? We see an inverse heavily gap. So let's just go to the 5. We will clearly see an inverse fair value gap here on the NASDAQ right there. So this would have really been a good sell trade right there. I could just put my sell trade somewhere right here. Stops at this high. And then my first TP would be at this 15 minutes draw on liquidity, which is right here. This 15 minutes draw on liquidity will be my first take profit. And then my second and my last take profit would be Asian lows right there. So I ended up missing out on this trade, and then I ended up waiting for another setup to form, right? So I ended up waiting for another setup to form, and this was it right here. So as you can see here, we ended up retracing back into this 1 minute bearish fair value gap, which we have right here. As you can see right there, right, this is a 1 minute bearish fair value gap, right? So if we check on the S&P 500 too, you can see price also retraced back into a 1 minute bearish fair value gap, right? Now, what do we see here? We see a 1 minute SMT right there, 1 minute bearish SMT. As you can see here, we didn't take out this high of this candle, but we took out this high of this candle on the S&P 500, right? So this creating a bearish SMT. Keep in mind, we are in a bearish fair value gap too. So this is giving us signals that we might likely go bearish, right? So on seeing that, all I needed price to do was just to inverse a fair value gap. As you can see here, we ended up inversing this fair value gap. But on the S&P, on the NASDAQ, we also ended up inversing this fair value gap. So look right here. Let me bring up the screenshot right there. So this was it right here. This was the time I wanted to take in this sell trade. So as you can see here, price has already taken out the swing low or the sell side on the S&P 500. But if we look at the NASDAQ, we haven't even taken out highs. Mind you, at this point, I had already taken a trade on my broker. I already taken the sell trade with my first take profit at this swing low and my second take profit at Asian lows, right? So, and stop loss at the swing high right there. So at this point, I am either holding this trade, but keeping in mind that I might lose this trade because it's already creating a bullish SMT. So what was going on in my head was, if I lose this trade, would I be happy about it? And the answer was no. Why? Because you clearly see the bullish SMT. So why would you want to still believe that price is going to drop to the downside, even though we've had all these clear bearish confirmations? Obviously, we've tapped into a bearish fair value gap. We've made a bearish SMT. Obviously, that's still good. But who says price cannot push to the upside after creating a bullish SMT? So I just decided to close this trade and see what happens. And then price ended up hitting TP. As you can see, price ended up hitting my first TP and my second TP. At this point, I was like, it's fine by me. At least I wasn't just trading with emotions. I wasn't just saying, oh, If I lose this trade, if I win, it's a 50-50. I'm not looking for 50-50 trades. I want to enter a trade because I know it's a good trade. I'm not just entering trades off of it because it's a 50-50 trade. So at this point, price ended up still hitting my take profit, but at this point, I was fine by it. I wasn't trying to. So after even hitting this trade, I was like, nah, it's already done. I'm done for the day. I didn't look for any other trades, and that was it. So today I ended up making about $0 today with some field cash on top of it. But yo, that was basically today's trade, bro. That was literally basically today's trade. I know most people would have still ended up holding this trade, keeping in mind that it's a 50-50. But yo, remember, trading is not just about just wanting to catch 50-50 trades. Bro, take a trade that you will know that if you lose, you will not be angry about it. Because I knew that if I had lost this trade, I would be angry at myself because I would say to myself that yo, you saw the bullish SMT. So why did you keep on holding the trade? Because it happened to me previously. It happened to me before, and I ended up regretting it. So I've learned from my mistakes. So even if price ended up hitting my TP, it's fine as far as I followed my plan. And yeah, like this would have actually been a good trade. Actually, this would have really been a good trade. My first take profit at the 15-minute drawn liquidity, and then second take profit at Asian low. So yeah, it is what it is. I know most people must have got this trade. Good luck to them, but yo, it is what it is. And I'll see you guys next time. Peace.